Show me, everybody, how are your energy levels? If the floor is low and the ceiling is high, show me how are the energy levels in the room? Okay, quite good. But we're going to need full energy and focus for this next session. So do what you have to do. Take a stretch, take a shake. We need high energy audience for this. So it is my honor to be introducing to you and to be moderating a super curious concept today called the reverse pitch. So over the last many years, we've had hundreds, maybe thousands of entrepreneurs on the stage at ChangeNOW pitching their solutions. What we're going to have today, in a novel twist, is for the impact investment funds to have their time in the spotlight, their time to shine, pitching their own investment theses, their own theories of change, what is unique about them. And we're going to have 17 different impact investment funds from different countries of different sizes, representing, I think, super cool diversity of the sector. And on the front rows, we have some limited partners, LPs, who can maybe support them with interesting collaborations in the future. How it's going to work. Each impact investing fund will have 4 minutes, 240 seconds to pitch their solution, their fund. Then we will have 2 minutes of questions and answers from the LPs on the front rows. My name is Nick McGurl. I'm your MC for today, and I'm also co-founder of 2 organizations, Changemaker Exchange and The Possibilists, which are all about finding the next generation of young impact leaders. And I'm very happy to say I've seen a couple of them in here, and one who will even be pitching today. And the limited partners on the front row, we have Natalia from Swen Capital. We have Silvana, also from Swen Capital. We have Gianluca from EVPA. Hans from AXA IM. Jan from BNP Paribas Agility Capital. And Alexandre from Phoenix Capital Group, who'll be asking the questions. All clear. I want to also test how good an audience are you to give the pitchers their best experience. So let's imagine someone has come onto the stage and given you a super beautiful, sharp, clear pitch. What is your reaction going to be? Okay, not bad. Now let's imagine someone's come on, given a pretty shitty, not so good, not so clear pitch. What's your reaction going to be? Yes, exactly. So it doesn't really matter what you do. Okay. So I'm going to now invite the first fund on. This is the pioneer of impact investing in Spain, all about empowering, caring, and regenerating. And this is Creas Impacto 2. Welcome.
Thank you, and good morning, everybody. My name is Lara, and I'm a partner at Creas, and I'm very happy to be with you here today to tell you more about Creas. At Creas, we dream of building a more meaningful world, what we call a world in more harmony, a world where the well-being of people and the planet are put at the center of every single one of our decisions. And we've been doing so since 2008. We were very well presented, the pioneers in impact investing in Spain, and we've been pushing the sector forward since then. We launched the first vehicle in 2012. We launched the first registered fund in 2018. We were the first B Corp fund in 2020, and we were also co-founders of the Spain National Advisory Board 3 years ago. Since then, we've made over 20 investments in impact companies. We've realized 6 exits with multiples over 2 times returns. And with our current fund, Creas Impacto, we are reaching over 1.2 million people each quarter, saving 32,000 tons of CO2 and creating meaningful changes in sectors such as inclusive employment or elderly care, among others. As was already said, we focus on 3 main impact topics. We invest in impact-driven, innovative, and scalable entrepreneurs that are either empowering people, so we invest in education and inclusive employment. They are caring and improving elderly care or well-being, or they are regenerating the planet with a particular focus on circular models and regenerative models. We currently have a portfolio of 9 companies that are doing exactly this. They are solving key challenges for our society, such as school dropouts, the digital skills gap, empowering migrants. They are improving elderly care, giving access to mental health, improving nutrition, improving mobility, or promoting new models in circular models in fashion and electronics. And we are able to do this because we are a great team. We are a team of 8 people that have been working together since 2018. And we are also very proud to have amazing advisors, very senior people, both from the financial and the impact sector. So I'm very happy to be here today to present you Creas Impacto 2, which is our next fund, our way to go beyond, to go deeper, to double down on the experience that we've already built throughout all these years. We see a tremendous opportunity in Spain. We have already over 250 companies that we follow closely, that were too early before, but that are getting there now. We invest mostly in Spain, which is a very thriving ecosystem with many innovative impact startups and with very few impact funds. And we want to keep focusing on companies that are creating an additional impact. We want to keep leading Series A and beyond, and we want to do so in order to be able to create that impact alpha that we're very proud of, to be able to keep adding value to the companies, to put impact at the center, and help them with people, strategy, financing, and whatever they need. And we will do so by strengthening a team. So we're launching a fund that is targeting 100 million euros. We will be investing mostly in Spain, but also in other European countries where we can add value in those sectors where we already have a lot of experience. We want to keep investing in Series A and take companies from Series A to Series C and beyond. We will invest tickets around 5 million euros to build a small portfolio of around 12, 15 companies so we can really engage with them and support them in their way to growth. So, in general, in Creas, we believe that to build this world, this meaningful world, we have to do it together. We have to join forces with other organizations that share our vision to build this meaningful world. So I'll be happy to continue the conversations with you later. Thank you very much.
Stay. That was exactly 4 minutes. Well done. Okay, we also have, after each one, 2 minutes, so time for one question from the LPs on the front row, if you have it. You have a microphone on the table in front of you.
Hello. Hi, thanks a lot. This is Silvana from Karman Capital Partners. Great presentation and very interesting approach. I'm wondering, since you're now on your second fund, what was the methodological evolution of measuring impact, if any, and what do you think are the key challenges that you faced?
I will have 2 minutes to answer that.
1.5.
Okay, no, thank you for the question. We take impact measurement very seriously. It's obviously been part of what we do since the beginning. We generally work very closely with the entrepreneurs to establish a theory of change. We establish with them around 3 to 5 key indicators and targets for at least 4 years, and we measure how much we've been achieving of these targets, right? And we generally try to, we support entrepreneurs in learning how to do this, in defining the theory of change, in understanding what their impact can be. We generally try to combine indicators that can grasp the scale of their impact and the amount of change that they're able to create, so output and outcome indicators. And then we aggregate how much percentage achievement they've achieved of this impact, right? And that gives us a social impact multiple. Many of you might already know this methodology. And for us, what's also very important is that we link our carried interest to the social impact multiple, which, as was said before, I think is something that differentiates impact funds from other more traditional funds. So thank you.
Wonderful. Thank you very much. Thank you. Okay. And so pitchers, if you see me sneaking up the side, it means your time is coming to the end. I'm going to be super strict with the 4 minutes because we're a little behind. Next fund, super interesting one of the very few impact funds implementing buy and build strategies. And this is Impact Expansion. Welcome.
Thank you.
Thank you.
Hello to all of you. It's a great pleasure to be with you today. We've been in the impact investing space for 10 years, and we're launching Impact Expansion. We basically focus on creating systemic change through a fund that is doing its first close at 50 million in June. We're nearly there. We're at above 40 right now. And we'll do our final close around 150. We're focusing on 3 issues: structural unemployment, climate and environment, and bad health. And as you know, these can be significant destabilizers of the socio-political environment in Europe. So really some of the most fundamental issues, but there are also great investment opportunities if you focus on solving them. Skilling and inclusion has been one of our focus sectors for the last 10 years. So has been environmental protection and change all across the agro-food chain. And health accessibility and effectiveness is our third sector of focus. We see that there's a large number of venture impact funds, and there have been a few large funds such as TPG Rise that have been built right at the end. But there's a missing gap in the middle, and that's the one that we're filling, which is basically growth funds that can support companies further in their impact mission and help accelerate their growth, either through minority stakes or majority stakes. And in certain cases through organic, but also through external growth, which we do through a hands-on approach. So we provide strategic advice, operation advice, organizational structure, business and build-up advice and support. And obviously, we're deep impact investors. That's the only thing we've been doing for the last 10 years. And hence, we have clear impact metrics and methodologies that are part of the growth plan of these portfolio companies. We have a team with the right skill sets. François and I, the 2 co-founders of COIS, we've generated in minority deals 27% IRR in Europe over the last 10 years. And we've been joined by 2 partners who have a buy and build, a majority track record, where they have been generating 3x in Europe over the last 15 years. And we have a much broader team covering the whole of Europe with different skill sets complemented. 2 examples of deals that we have already done. So we have 2 deals being warehoused. The first one is Potential Project, which is basically focusing on the huge burnout epidemic that corporates are seeing. And that burnout epidemic has numerous consequences. On one hand, on health, on the economy, on well-being, but there's also the change in mindsets in corporates. All of you present or collaborating with large corporates know that if corporate employees are given an opportunity to align their purpose with the power of multinationals, we have a huge change agent. And that's what Potential Project is doing. Like the rest of investments of Impact Expansion, it's a profitable company with 6.5 million revenues, 2.2 million EBITDA, growing by 50% per annum. We've invested at a 13 million valuation, and they've already received an offer to be acquired 100% at 30 million, which we've refused. But so those of you who will join us as LPs, you're already in safe territory there. Second investment is in sleep apnea, SomniPlanet, offering a technology and home healthcare platform in order to leverage the benefits of connecting patients with you want to know, because maybe some of your family members have sleep apnea.
My daughter, definitely.
Your daughter. And with that platform, she'll be able to connect doctors with patients, with payers in a much more effective manner. So 2 deals already in our portfolio out of a very promising pipeline. Thank you very much.
No, thank you very much. Stay here, please. Thank you so much. Super interesting stuff, and love the focus on well-being, and anything that can get my daughter to sleep, invest in it, please. Yes, 2 minutes Q&A.
Yes, this is Natalia from Rethink Capital. So as you're in the buy and build strategy, and that's great for an impact fund because there's a lot of impact funds in this segment, how do you cope with current valuations in the market? Because there's a lot of inflation in valuations, and you're facing to more classical private equity funds. So how do you win deals?
So on the valuations, our 2 first deals are proprietary. So hence, we've managed to get into these deals between 2 and 3 times below what we think the comps are in the market. Approximately 50% of our pipeline is proprietary. Having been in the space for 10 years and our partners having been in the buy and build space for 15 years, we have 40 CEOs with whom we've been working and with whom we continue to work, and then a broad network. On the other hand, we are seeking to do profitable investments, growing investments, at attractive valuations, and so it's our job to just say no. I think that a lot of the deals we've won in the past and that we keep on winning is because they're entrepreneurs and executive committees who are super passionate about what they do. And the idea that their company is going to be turned around by a classic investor who doesn't have an impact mindset, it's something that hurts them, and they want to keep purpose and profits aligned, and we can hence win deals in these environments. And then there's other entrepreneurs who actually just wake up to the fact that their business has always been an impact business, but they didn't know it. And us telling it to them, showing to them how their strategy can be steered forward, they're like, wow, this is actually giving me wings. And this is what I have been doing for 5 or 10 or 15 years, but doing it with that purpose, I want to do it. And hence they come to us and not to classic PE investors.
Okay, beautiful. Thank you very much. Thank you.
Thank you. Thanks to all of you.
Okay. Next up, we have Europe's largest mobility tech fund to invest into the next generation of startups, Rethink Mobility Fund. Welcome.
Good morning, everyone. And yeah, it's fascinating to see all these different approaches here and great ideas. Mind-boggling, to be honest. Yeah, thank you, first of all, to the whole team of ChangeNOW for the invitation, and the BMW Foundation to invite us here today. With me here today is Kira. Hands up, Kira. She's our Chief Impact Hero, so in charge of most of what I'll be saying here today. My name is Matthias. I'm one of the general partners at Rethink Mobility, and our mission is to decarbonize how we move from A to B, how we decarbonize transportation in Europe. So, what do you tell a founder early on that sees opportunities left and right? You tell her, focus. And we focus as well, and we focus on mobility. And why do we focus on mobility? I give you 4 good reasons. Reason number 1, climate change. The transportation sector makes up 25% of greenhouse gas emissions in Europe, and it has proven the toughest to get reduced. Secondly, when we set out, we had inspired by the Green Deal of the EU, we had the ambition towards 2030. How can we get rid of gas and oil by 2030? Now, 84 days into a war, the ambition that we all have is to get away from oil and gas by next winter, basically. Thirdly, cities, livable cities. Now, to fight congestion, to reduce pollution, and to give people access to transportation is top priority on the mayors' agendas across the globe. And that's what we want to support. So what you're looking at is an incredibly complex sector, deeply in transformation. And our ambition is to guide founders through the complexity of this sector, to see through the complexity and to see business opportunities, investment opportunities that make a difference to society. Some observers believe that mobility is the largest business opportunity in the world, heading towards the SDGs in 2030. So, how do we do that? So, first of all, there's a strong impact commitment that we have, and it's guided by an impact framework that walks the talk. And back to Alex from the first panel, including carried interest that is tied to achieving impact goals. We have a clear sector focus that allows us to early identify and better evaluate deals. And we have a group of investors, experienced entrepreneurs, corporates that are all there to support our founders. And of course, we have an entrepreneurial mindset. Ideally, we provide our startups not only deep domain know-how, but also their first customer. And we combine the best of both worlds: financial driven, quick investment decisions, deep impact aspiration, and support. So finally, feel free to join the ride. We are in our first close, which is above what we had expected, and looking for one more impact-oriented investor until the end of the year. Thank you very much.
Thank you, Matthias. Nice timing for you to be here then, it seems. One question. Thank you, Hans.
First of all, let me compliment you on the focus on a big sector, which is, I think, very helpful. However, you've not been very specific on the types of companies that you invest in and how an investment in a reasonably small company can change or support the change of such a big endeavor. Can you give me one example?
Sure. So first of all, we are an early stage investor. Yeah? So that's also where we come from, early stage investments. So what we see is that big ideas do not get funded because they don't fit to something that people have seen. So big generalist VCs feel happy comparing the 10th e-scooter startup with 9 others. But if you invest into something that is really different, it is difficult. I'll give you an example. We're looking into a company in the rail cargo market. Exceedingly tough to get into that market from a startup perspective. With everything that you want, regulation, long processes, orders still sent by fax. So we have identified someone that can make a difference there, a startup, and they don't get funding. Because what do generalist VCs do? I don't know that space. How do you want to make business? You're selling to people that don't like startups, that are not open to innovation. So that's the sort of thing that we want to do.
Okay, great. Thank you, Matthias. Thank you. And next up, so we have a key player in the Latin American landscape who have built a team rooted at the local level. That's Alive Ventures. Welcome.
Hi, everybody. My name is Santiago Alvarez, and I'm one of the co-founders and managing partners of Alive Ventures. At Alive Ventures, we are an investment firm that is seeking to achieve intentionally positive impact returns, as well as attractive financial returns to our investors. And we do that by investing in 3 different sectors. We invest in more than sectors are 3 different themes, in what we call education and pathways to quality jobs to try to bridge the inequality gap in Latin America. In income generation opportunities, businesses that through the use of technology, they support small SMEs across Latin America to scale and to grow, and companies that provide products and services to improve quality of life of low-income population. We were born in 2016 with the support of Acumen as a sponsor. having said that, we're a fully independent for-profit structure, and also with the support of the Inter-American Development Bank as anchor investor. Over the years, we have already closed and invested our first fund of 28 million. We are signatory of the PRI, and we are also one of the founding members of the 2X Challenge, as we have incorporated a gender lens across our investment process. Since 2018, where we had our first close, we've invested in 8 portfolio companies. We have achieved very attractive financial returns of 1.7x cash multiple and 33% IRR. But more interestingly, we have also achieved very positive impact outcomes. Our portfolio has impacted over 10 million lives. 30% of those 10 million is population living under the poverty line, and 60% of those 10 million is population living they are underserved population. We have also channeled over 4x our investment capital into these portfolio companies. We invest in companies in what we call the early growth stage, meaning companies that they already have a track record, companies they have, so you get a sense, over $1 million in revenue. This traditionally would be a pre-Series A or Series A stage. We are an active investor. We take board representations across all our portfolio, and we invest tickets in the range of 500K to 3 million. This is the portfolio we have built so far. As you can notice, primarily focused in Latin America is in Colombia and Peru, where we have offices and local team. But we also invest in companies across other markets that they have expansion plans to Colombia and Peru. Important concentration in our portfolio in education and pathways to quality jobs, but also diversified across different sectors, such as access to energy, agri-industry, and SME lending. We have been backed by very reputable investors in the region. And we feel very proud to be one of the few impact investors in Latin America that have 1/3 of the investors being local, meaning Colombian and Peruvian investors that have supported this thesis. A lot of the financial conglomerates and groups have supported Alive's thesis as a new way of investing. And also, we've been backed sort of by international investors in the US and Europe. We launched at the end of last year our second fund. It's a continuation of our strategy. We want to continue doing what we have been doing. Our first fund was a proof of concept that we have, as showing the track record, has been very successful, and we want to continue doing more of that. It's a fund targeting 80 million and with a first close in Q3 of this year.
Gracias, Santiago. Thank you very much. Question from Alexandre. Thank you.
Hi, Alexandre from Phoenix Capital. How do you explain that concentration towards quality jobs and education companies, and will Fund 2 follow the same concentration?
It's us. I mean, in Latin America, the biggest challenge that we face in the region is inequality. And you have a traditional corporate sector that they say they cannot find sort of the qualified capital that meet their needs. And then you have millions of people sort of without access to jobs. But you do have, you could call it kind of universal education, primary education at least. And so the biggest gap is just quality of education. With the pandemic and the adoption of technology, there has been a significant push in terms of businesses to try to bridge that gap and provide non-formal technical education for people to access jobs. We are being one of the largest players in supporting this new trend and supporting companies that are trying sort of to provide these skills and eliminate barriers to access formal jobs for population.
Cool.
Thank you very much, Annie.
Thank you. So next up, we have an urban sustainability technology fund who announced a huge closing round end of 2021 and are now hunting for gigacorns. Okay, welcome, 2150.
Thanks, everybody. Great to be here. You've stolen all my thunder now. That's okay. Hi, my name is Nicole LeBlanc, and I'm a partner with 2150. I moved from Toronto to Copenhagen at the height of COVID in order to join this fund, and I'm really excited to tell you all about it. So why 2150? All of you know 2050 is an important goal. You're all working towards those goals as part of your organization, and we are too. But one of the important things to think about is it's like when you're on a diet and you do really well and you lose all this weight and you're so excited about how you look and how you feel. But then you can't go out and just eat pizza and hot dogs again because you've put all that work into it, and then it ends up being for naught. So what's really important for us is to make sure that we're not having these same conversations 100 years later in the year 2150. So that's really what we're focused on, is investing in sustainable urban technologies that make cities better places. So cities are where the climate battle will be largely won or lost. And so I have moved from one city to another. I don't know, a show of hands, how many of you here also live in a city? I'm assuming probably the majority of you. Actually, 70% of us will be living in cities by the year 2050. The majority of us actually live in cities now. 80% of the GDP comes from cities, 70% of energy, 70% of emissions. All of these things comes from cities. Cities are so important to fighting this climate crisis. And we all have a higher quality of life by living in cities. And so we're really excited to be working on technologies and working with technologies that can make these cities better places. And if you look at the graph here on your right, it talks about the growth in urban technology. And it's really exciting to see how many other investors, how many other asset classes are also investing in urban tech and really starting to put dollars behind technologies that can make cities better. But what really important thing is to also understand where the emissions are coming from in cities. And so building on the work that Matthias that spoke earlier is doing, mobility has a lot of money going into it, and we want to keep up that momentum because it's so important to decarbonize how you're getting around and how goods are getting around. And what we want to do is double down on some of the other sectors that maybe hasn't seen as much love as mobility has. And so we really are looking at investing across what we call the urban stack. And so we have 4 layers to a city. If you think about, you have digital and physical infrastructure. This enables really everything else from a city to be built upon. Then you can build all of these great buildings and wonderful things on top of this infrastructure that will really enable flexibility and to be able to have wonderful buildings and other types of structures that we can all have as we go about our day. Then you have to operate these assets. And so how do you do so in a way that enables a sustainable lifestyle, a low emission lifestyle, one that's flexible and supports all different kinds of people and all different kinds of lifestyles. And then lastly, how do you make that a really great experience? How do you make sure that everything works when it's supposed to? Certainly moving from a city of 6 million people to a country of 6 million people has definitely eliminated this entire layer of friction I didn't even know existed in my life. And I love being able to cycle to work, and myself and all of my friends, none of us actually own a car, and it's just a wonderful way to live. So being able to have technology to support that is really amazing. And I really want to talk about gigacorns because we are hunting for gigacorns and we're looking for others to come help us with that. And so gigacorns are tech unicorns that can mitigate a gigaton of CO2. And what's really important is they are very elusive, but there's more and more coming. And we really hope that you guys can kind of come on this journey to really help us fight that. Because what's really important is for all of us to really be able to have impact. Because we actually don't believe that you have to sacrifice impact for financial return. We can actually find these amazing technologies that make cities better places to live and be able to meet both our financial and our impact objectives. We've made 8 investments since we closed our fund last year, and across a number of sectors, across 6 different countries. And I'm actually going to be talking with one of them tomorrow, Biomason, which is a biocement company. So if you're around, be sure to come tomorrow morning and check it out. Thank you.
Thank you. Super. Okay, one question.
Thank you very much for the presentation. I have actually 2 questions, but very quick ones. So first of all, how do you ensure that the social as well as the environmental component are taken into consideration, and whether any trade-offs emerged in those 2 components, and how important is to collaborate with public institutions as you operate at city level?
Great question. So we actually have a head of sustainability who's recently published our impact framework, and it actually takes into account all three elements of E, S, and G. The E is easier, it's easier to quantify, so it's sort of where everybody gravitates originally, and that's what we have done. But we also have a number of ways that we're really trying to make sure the S and the G aren't sacrificed. And so we actually put a sustainability clause and a diversity clause in all of our term sheets, and we're partnered with diversity.vc as well to make sure that happens. And if you look at our impact framework, there's actually 4 different elements. Of one is profit and purpose. And so that's really important to us is as we're working with our portfolio companies to be able at the board level to identify various elements of an ESG strategy that they can implement over time in their own companies. And then what was the second part of the question?
Sorry, very quick on the collaboration with cities and municipalities.
Yes, so we actually have an advisory board that has a number of people. One of them is Daniel Korski, who is the founder of Public.io that's really helping cities digitize. And the other is Richard Florida, who is a renowned urbanist based in the US. And what's really important for us is to understand not just one city, but multiple cities, and really figure out how our technologies can work within the constructs of existing cities to be able to deploy their solutions at scale.
Thank you. Super sharp answers and nice focus on diversity coming back to one of the opening panel points there. Next up, and on a similar theme, so we have the first European VC for immigrant founders now, and that's Common Ground. Welcome, Guillaume.
Thank you. Let me introduce you to Saeed Sadat. He's the former Minister of Communication in Afghanistan. That's him. He had to flee his country and became a courier when he arrived in Germany. Today, 1 in 95 people in the world are refugees, and 3% of humanity are immigrants. Let me do this. The war in Ukraine, the departure of American troops from Afghanistan last summer, the crisis for Syrian refugees in 2015, not to mention Sudan, Yemen, the situation in Venezuela. We see that migration is scaling up, and it has only begun. Yet our European societies seem overwhelmed. They don't have that capacity to think ahead, and they don't have the capacity to welcome talents, capacities from newcomers. In the meantime, the share of immigrants in the EU as self-employed has doubled in the past decades, from 6% in 2010 to 11% in 2020. That means more entrepreneurs that are looking for a job. So entrepreneurs to get kind of any job, like Saeed. But we know that migrants are also in capacity to build jobs and to be job creators and to contribute to society. But for some reason, they are not on the investment map yet. We still see them as a risk profile where they could be perceived as an asset. 10 years ago, I built an organization called Singa with a couple of friends to prove the contrary. Singa is the first largest ecosystem that brings together local and natives to work on entrepreneurial projects. Our participants are supported by incubators, a business lab which looks like a startup studio, an accelerator, emergency funds. In 10 years, or just actually in the past 5 years, we have trained 1,000 entrepreneurs. We have created 337 successful businesses for 900 jobs. We've seen innovations in education, in health, in finance, in different sectors. Examples are many. We have French entrepreneurs like Donia, who created Meet My Mama to give access to employment to hundreds of migrant women. We have Raiz, who is a Syrian entrepreneur who has created innovation in circular economy. He has created an app to collect metal waste. Today, Singa is scaling up. And the finance arena is a must-go. We believe that a fund for the inclusion of migrant entrepreneurs in the investment map is essential today for change. A fund who would include migrants will have different impacts. The first one is that if you invest on migrant entrepreneurs, you respond to 13 of the 17 sustainable development goals directly. You will invest in diverse teams that are 20% more innovative, and you will create jobs for both native and immigrants. I'm already late, right? Yeah, okay. And tax revenues, and more importantly, you make change. So, how can we work together? In coming weeks, Singa will launch the fundraising period with the management companies. We're currently building financial and technical support, which is a really important team to make that happen. And also, we started to scout entrepreneurs all over Europe to be able to have a really important deal flow. Thank you. You can come to see us. And the team of Singa is here with Revital and Louise.
Awesome. Thank you. And thank you, Guillaume. I gave an extra 20 seconds because Guillaume was one of the first young social entrepreneurs we supported through Changemaker Exchange. So thank you. One question, please. Thank you.
This is Natalia from Rethink Capital. Thank you very much for your presentation. I love the soul of your project or your fund. But for me, it's not clear what are the main requirements for an entrepreneur to be funded by you, other than being an immigrant in a foreign country?
So to be refugee or migrant entrepreneur first, because we see that we don't invest in these talents today in Europe. And second is to be innovative and to have a scalable project. And we'll be also looking at all the other impacts connected to the Sustainable Development Goals for their company. So we won't invest in someone that wants to build weapons or something like that. So, but the types of company we've been supporting for the past 10 years, 66% of them were with a social or environmental impact. So this was their focus. So we also see that migrants have that proportion to actually go towards companies who build more communities, who have environmental impact and social impact.
Thank you, Guillaume. Thank you. Okay, next up, we have an African fund run by a team with extensive and comprehensive expertise in the African market and ecosystem. Welcome, Django Capital.
Hi everyone, my name is Fatoumata Ba and I'm the founding partner of Django Capital. Every year in Africa, we create only 3 million net jobs. Yet, we need to create at least 30 million net jobs to cope with our demographic increase and to employ our youth. Africa represents 15% of the global population, yet we only attract 2% of the VC funding globally. Today, 4 countries concentrate more than 70% of the VC funding on the continent, leaving 50 countries behind. African women are known to be the most entrepreneurial globally. We have a total entrepreneurship activity rate of 26%, which is the highest, yet we have a $42 billion funding gap that could add an extra $300 billion to our GDP, so 10% of extra GDP. Africa today represents less than 4% of emissions globally. Yet, we face the most pressing risks and challenges, from floods to rising waters to rural exodus. And this has to change now, because the clock is ticking. But what if I told you that we don't have any fatality, any resignation, that we can combine profit with purpose? Janngo actually means future or tomorrow in Fulani. And what we do is that we really believe in the power of technology and capital to help leapfrog development in Africa. More concretely, we invest between 50,000 euros and 5 million euros in tech-enabled platforms that are achieving three main things. Number one, they help accelerate and massify the access to essential products or services. It can be food, it can be education, it could be healthcare, it could be financial services for the many. Number two, it helps tens of millions of SMEs in Africa that are the real backbone of the real economy to have access to market, to have access to logistics, to have access to finance. And number three, it also helps create jobs at scale and other distant economic opportunities, directly, indirectly, or induced, with a focus on women and youth. The good news is that change has already started. In particular, for instance, our portfolio company, IMSP, has been sourcing, procuring, and delivering tens of millions of medical supplies in each and every African country since the beginning of the pandemic. In Nigeria, for instance, our portfolio company, Sabi, is platforming the informal retail. To date, 200,000 SMEs and mainly small mini retailers have been able to procure more than $200 million worth of groceries at reduced cost and improved efficiency. In Senegal, for instance, our portfolio company Fleety is really helping revolutionize transportation and mobility. But more excitingly, they're doing it while reducing fuel consumption by 30%. But what we are even more proud about is that we have today a portfolio of 11 companies that are 56% female-led, the highest on the continent, yet delivering superior returns. We have a 5x cash and cash multiple for the previous fund. And that's why it's very important for us to have as many as you as possible, to join us on that journey to leverage technology and capital to help leapfrog development in Africa. And this starts now. So thank you very much. You can come find me and discuss our second close for a 60 million euros fund that is already backed by the EIB, the African Development Bank, by ProParco, and by also more and more institutional and private LPs that believe in our thesis. Thank you very much.
Thank you. Stay there. Wonderful. Thank you. Any questions? Yeah.
Yeah, very interesting angle to be backing VCs in Africa. I think it's pretty key. Have you been able to bring new VCs now from outside, investing in your follow-ons of your company, which I think is you're making a new market, right?
Yeah, absolutely. So we've seen, for instance, our portfolio company Sabi has been raising with prominent VCs such as Norsken. So Norsken, for instance, is a $200 million fund that has been launched by the founder of Klarna, and that is investing in tech in Africa. We have some portfolio companies that are actually raising follow-up round with the like of Bourda or Sequoia. We have actually some portfolio companies that are actually also attracting follow-up rounds by DFIs, such as ProParco. So as we speak now, we have a due diligence ongoing with one of our mobility and transportation deal flow company. And I think it speaks highly to how we need catalytic capital to then create a real commercial value chain that will really be what we need to move from 2% of VC funding to hopefully 15 to 30%, because really we need it to help leapfrog development on the continent. Thank you very much.
Thank you. Okay, so this is now going to be the last pitch before the break, and usually by the time it's the last one, you're like, oh. So let's make sure we give a special energetic welcome to the last pitch before the break as well. The best proof that environmental can only go together with social, that's Citizen Capital. Welcome.
Hello. Hope you still have a little energy, attention. Yeah, I co-founded Citizen Capital 14 years ago in 2008, before I even knew about impact investing. And the whole issue for us was to use the power of capital to drive change in society. And we've spent these 14 past years investing in companies to show evidence that impact is actually part of value creation. And we're very proud now to have a fund 2 that has a great track record, both on social and financial performance. It seems we're heading towards 20% net return, which is incredible for us. And once I said this, in fact, we want to use this to open new investment paths, because we know, as Cyril said, that startups or high-growth startups won't do it all, and that we have major challenges to take where we can't have double-digit returns. And I want to talk about two very different approaches in the same strategy. To be explicit about what impact is for us, we seek to partner with companies where the impact is at the core of the business model, typically mission-native companies, where the client buys the impact. Ideally, if you remove the impact, there's no business model. Now, for some companies who are not there yet, if we have visionary entrepreneurs, we're happy also to get them there by helping them build impact-based strategies. Second, we look for innovators that have the potential to bring systemic change to unsolved problems, like bring doctors in underserved areas, like digitalizing carbon certification, like upcycling waste, food waste, to bring new raw materials to industries, etc. And three, this is part of our culture, but we focus on what we call fundamental issues, which are deep, resilient markets that are resilient even in low economic cycles. And basically, we look into health issues, aging issues, education, low carbon models. And as a matter of fact, we have several fundraisings at the moment. And I want to talk about share with you a few elements about two very different funds that are emblematic of our strategy as a management company. First, we're now raising Fund 3, which we've made a first closing for 80 million, and we're targeting 120. And Fund 3 basically reflects our core strategy and leads or co-leads tour into 5 to 50 million revenue range. We're aiming at having a balanced portfolio between late-stage growth on one side and expansion with more mature companies on the other, selecting top-level mission-driven entrepreneurs and enabling these companies to build a long-term impact strategy, which with years goes into the culture of the company. Now, we're a société à mission, which is a legal framework in France for mission-driven companies. And our mission, the 16 of us decided our mission is not only raising bigger private equity impact funds, okay? It's also to explore new investment paths to answer needs that are poorly served by the market. And one of them is a social impact bond fund we're working on, which is the first French independent social impact bond fund. I'm finishing, this is the last one. Alongside the unique fund that exists in France today, which is the BNP and an EIF fund, there's a need for investors to go into this new emerging market, which we think is absolutely capital to improve drastically social efficiency for public spending. And we need private actors in here.
Sorry, I have to wrap it. Sorry. Thank you so much. Thank you.
Thank you.
I feel like the bad cop. Question on the front row here. Thanks.
Hi, thanks a lot for the presentation. It's very interesting. I see that you have a lot of experience raising impact funds. So I'm curious to know what's your view on investor additionality. If you think that investors actually do play a role in generating further impact, because I see that you already work with companies that have this embedded into their, business idea. So how do you see this role of the investor, and can you give an example?
First, it's still a big challenge to raise even what we all call now a mainstream impact fund. This is still a challenge. And second, as a management company, our additionality is specifically to be able to use the power of a fund that has, I'd say, an ambitious potential in terms of return and impact, but that will work for startups, high growth SMEs, and to use this base to go and innovate in new paths. And this is probably now where I think we can bring the most additionality, is to continue what we did 15 years ago, is to continue exploring new paths, new investment paths, because there's much to do for farmers, for NGOs, and they need also the private market and not only the state money.
Okay, welcome back. I think people slowly coming back from coffees. Everybody ready for action again? Yes? If you could come in and sit down, please. Okay, so welcome back to the reverse pitch sessions, where we have impact investment funds pitching their own funds to limited partners and to a bigger audience. We're going to have another 8 funds in this section before lunch, and we're going to kick off with a UK fund born actually from the marriage of 2 pioneering UK funds tackling inequality. So welcome to the stage, Growth Impact Fund. Come. Woo!
Hi, everyone. My name is Matu J. Loganathan, and I'm the head of investments at the Growth Impact Fund. In the UK, over 14 million people live in extreme poverty. This has been exacerbated by COVID and the cost of living crisis. And today, the ones that are the most affected are people that are underrepresented and diverse. At the Growth Impact Fund, we believe that the diverse entrepreneurs are the ones best placed to solve the problems we've defined here today. Unfortunately, these are also the founders that do not have access to capital. Between 2009 and 2019, only 2% of venture capital early stage funding went to Black entrepreneurs. We're creating a £25 million evergreen fund that is going to be investing in 50 social entrepreneurs in the UK. The fund is a consortium backed by Big Issue Invest and Unlimited, 2 leading social impact investors within the UK. And we have the track record and the pipeline to deliver this fund. So how are we going to be doing this? We're investing across 4 key sectors: consumer business, education and learning, health and social care, and employment and training. We're looking for founders that have overcome barriers in socioeconomic advantage, race, gender discrimination, place-based discrimination, and disability. We're hoping to make investments in equity, patient debt, as well as revenue participation. And we truly believe that these are the organizations at the pre-seed level that are going to be able to get to scale. We've got about $6 million in grant funding that's going to act as $3 million of it as a first loss layer for investors coming into the fund, and an additional $3 million as technical assistance grant funding to support our ventures, hoping to deliver a return of 7.5% back to investors. How are we going to create the impact? Who are we? So the Big Issue Invest is one of the UK's leading impact investors. We have over 150 million in assets under management and 41 million in direct investments going to social enterprises within the UK. Unlimited is the foundation for social entrepreneurs in the UK. We've backed over 17,000 social entrepreneurs. And we have leading sector partnerships with the likes of eBay and Comic Relief. And finally, we have an independent evaluation and continuous learning partner in Shift that we're working with to make sure that we stay on track to our impact. How are we going to create impact? We're focusing on SDG number 10, which is reducing inequalities. We think that we're going to be able to support and maintain 85,000 jobs and over 105,000 training and employment opportunities. We also think that we're going to be contributing to good health and well-being and zero poverty SDG goals, creating over 240 million in social value. And finally, in 5 years, I don't want to be running a diversity, equity, and inclusion fund. One of our major objectives in the fund is to share the systems and the processes that we're developing to make investment funds more inclusive for all of the entrepreneurs we're hoping to support. We have 10 million committed so far with cornerstone money from the Access Foundation for Social Investment and the Bank of America, and we really hope that you'd be able to join us on this journey.
Great, awesome, thank you, and love the ecosystemic focus there. Any questions from the front row? Go for it.
Just was interested to hear you about the social value. I think it's pretty key to better understand them. So if you can just explain for the audience, I think it would be good.
So what we've done is we've taken proxy values from our current portfolio of the social value that's been generated, and we've determined those values by running mini randomized control trials to determine what the difference is going to be in the value created by our social enterprises versus a normal business, versus the NHS or a government provider. And we've taken that and applied it to our number of entrepreneurs that we think are going to be working across the 4 key sectors. Critically, healthcare and access to goods and services that are for the poor within the UK is the factors that we're looking at there.
Great, thank you so much. Thank you. Next up, we have a very small cap Dutch investor uncompromising about gender diversity in the teams they invest in. This is Karman Capital. Welcome.
My name is Cilian Verplanken. I'm representing Karmijn Capital, of which I'm the co-founder. I'm asking you a question. How many times, as an investor, did you ever meet at the other side of a table a gender diverse management team? Or let alone female entrepreneurs? Now, that was the question we raised ourselves in 2009, being 3 female fund managers or investment managers. And we said there was less than 5 over 20 years of work. And then we said this needs to change. So we started funding Karmijn Capital, being the first fund of its kind. We focus totally at the S of ESG, at the social part. And that has to do with the fact that the E and the G follow and are aligned out of that S. It is in our roots. Now we also have those SDG tiles, and that's what we are aligned with is number 5, which is then the gender equality one. We are currently raising our 3rd fund, and that will be a hard cap of 120 million, and have now soft circled 70 million, but we still have till the end of the year. We are addressing an undertapped market or underserved market. In the Netherlands, 25% of all SMEs are combined are gender diverse teams. But if you ask all the private equity players, less than 1% of their portfolio contains mainly also women in their teams, because they usually bring on the diversity. We invest in small cap buyouts, we provide growth equity capital, and we call ourselves collaborative capital in the sense that we would like to work with the founders. We're usually the first investor in a team, and we take minorities, majorities, as the case may be. But next to that, we also drive industry change. In the Netherlands, only 3% of all partners in private equity are female. 97% is men. Well, no problem with men at all. But within Karmijn, it's just the other way around. We have 2/3 of female partners. I would like to show you we developed this framework ourselves. We want to embrace the power of diversity and inclusion. And this framework unlocks the value within these SME companies. On the left side, you see different leadership styles, feminine and masculine. You can decide for yourself what you think applies to you, but it goes for long-term relationship, short-term games. It goes about inspirational leadership versus taking control and action. It goes about task-oriented and long-term views. This together in a management team brings in a company to inclusive cultures, where, let's say, differences are a contributor to success. It leads to risk management. When you have balanced opinions, then you see that risks are identified earlier on, and you can manage them earlier. It goes to creativity and innovation. It's been said so many times already this morning. But making mistakes is okay, because out of mistakes, you get new ideas and new products. And all in all, sustainable entrepreneurship, taking care of your environment, taking care of all stakeholders, not only shareholders. That in a company leads to employee satisfaction, and if you have happy employees, customers notice, and they will order more. So all in all, this creates a double bottom result, as we say. Happier, healthier customers reflecting society, but also having better financial returns. Twice. And I would like to show you our outcome. When we invest in companies, they are usually diverse already, but when we invest in, let's say, sex-only ones, then we apply the other sex to it. Today, nearly all our companies are diverse. It's just a woman retired a year ago. With regard to female CEOs, in our companies, we're nearly at parity. I want to stress, this has nothing to do with activism. It's just we don't want to comply with the excuses of there are no good females who can fill in this role, or we need the best, which we always hear. Why can't a woman be the best? Now, thank you for your attention. This is what we try to achieve. Thank you.
Thank you.
Thank you very much for your presentation. My question is, how do you track progress on your impact objectives? So you mentioned how this diversity that can lead to value creation, but is there a way in which you track how that value creation happens?
Yes, we set the KPIs with all the portfolio companies, and we monitor this closely, and we report on it. We also have the help of MG Hudson Spring in that, with each and every company. And how we track it, it's at different levels. It is about salary gaps. It's about employee satisfaction. It's about churn within employees. If you have just companies where everybody runs away, you know it is not sustainable. All these different measures are being measured. And that's what we take on in our reports as well. Let alone, of course, counting men and women. Yeah, which is obvious.
Awesome. Thank you so much. Thank you. Okay, and next we have a fund which invests to help those first hit by the transition, pioneers in France and in Europe. It's BNP Paribas Social Business Impact. Welcome.
Thank you. Hello everyone, my name is Marie d'Auvergne. I'm a senior analyst within BNP Paribas. What we do within my team is we are developing and managing solidarity funds in order to finance and support the growth of non-listed social businesses and non-profit organizations. And I'm very happy to be here today to present you BNP Paribas Social Business Impact Fund, which as of today has invested in 125 million euros in 23 investees. So our fund's objective is to invest in social and environmental impacts. We target social businesses of what we call in France l'économie sociale et solidaire, which is mainly solidarity and social economy. And our main criteria is the type of beneficiaries of the product or the service. These beneficiaries has to be excluded or disadvantaged people. And this exclusion can come from health, education, isolation, old age, etc. And thanks to the asset that we have under management today, we are able to have a diversified impact. As you can see here, we have invested in 23 investees in 7 social areas. For us, access to employment, housing and health are what we consider to be our main targets, since these are the first and more painful exclusion that you can have. But we also invest in other areas such as environment, microfinance, accommodation for dependent people. And to give you a bit more color, I can talk about one of our investees, which is Envie Autonomie. Envie Autonomie is a social business, a French one, which picks up used medical equipment, such as wheelchairs. They then recondition them thanks to people in job integration programs, so people that are underprivileged. And finally, they sell them at a solidarity price to people who can't afford them but who need them. So here you have a triple impact. This is what we like in this investee. First, an environmental impact thanks to the reconditioning, and then two social impacts: employment of people that are excluded from the job market, and also the price which is affordable to people. So we love impact, but what we do is not philanthropy, we do investment. The impact has to be at the core of the strategy of the company, but we still assess the financial health of the company so that we can avoid default and loss. We invest in equity, quasi-equity and debt in these companies, and we have specialized tools for NGOs and cooperatives because these kind of companies have a strong impact as well. And once we have invested, we are an active investor as we support the company all along the investment phase, which can be quite long because we are long-term investors. And then a few details on the fund itself. So the fund was created in 2014, so we now have a strong track record. It is a French Article 9 FPS, with several French labels such as ESUS, Finansol, or France Relance, for those who know. And we are able to give liquidity thanks to a monthly valuation and a 15-20% cash pocket. So you've understood, now we have 23 investees, but there are still a lot of companies that are helping excluded people that are in need for capital to scale and grow. So for 2022, our aim is to invest 30 million euros in these companies, and I'll be happy to discuss any opportunity with you after if needed. Thank you.
Thank you, Marie. Great. Any questions? Yeah, Hans.
Thank you for the presentation. Looking at the investee companies, it looks like a very French initiative. How do you envisage making this type of fund interesting for non-French investors?
It's a good question. Now it's true we invest in France-based company and they can have activity abroad. We have validated the possibility now to invest abroad in Europe, so we are still thinking of our strategy internationally, European mainly. We have our first, we are studying our first prospect in Germany. So we're gonna attract investors through our investment first, and secondly, we are doing a lot of lobbying around what we do because our funds are fueled by 90-10 funds, which are specific French funds, and we are aiming to develop these funds abroad so that they can fuel our fund that will have also a European impact. Thank you.
Thank you. Super. Okay. So next we have the impact mover who rely on the donut economics theory to build their investment thesis. That's Rethink Capital. Welcome.
Hello everybody, my name is Nicolas Cellier. I'm co-founder of Rethink Capital, as you said it right. And I will present you today Ring Altitude the second, which is an impact growth tech fund. Okay, but you know that the digitalization of the world is massive. It has been accelerating lately with the pandemics. Meanwhile, we face two huge challenges, both environmental and social. The good news, if any, is that this has led to a clear emergence of a new generation of entrepreneurs who've innovated to use tech and digital to find new solutions to the world problems. And more importantly, maybe less visibly, entrepreneurs that have also innovated to create new business models. Business models will be able to align business performance and the solution and impact and solution to social and environmental problems. This kind of the new generation of entrepreneurs, you know, you're here and you know that, they look for a new generation, a new kind of investors. Investors that are mission-driven investors who share the same interests and the same quest for alignment between performance and impact. But when they are tech entrepreneurs, they also need investors that understand the tech issues and can help them expand, grow their business, and develop nicely. So this is Ring. We are at the full intersection between the impact investing world, where we have been a pioneer in France, and between the tech scene, the tech investing world, where we have been active since the early 2000s. The team. Since the very beginning of Ring in 2018, we set up a team with mixed operating and investing experience. So we have in the team some investors profile like me, tech investors, some impact investors, some specialists of data science, of R&D, of digital marketing, and some entrepreneurs. My co-founder, Geoffrey, has been a very successful internet entrepreneur, a full entrepreneur. Myself, I've been a tech investor for the last 20 years. I've spent most of my time at Capital, which is a French VC fund. And on a side project, I co-founded Investir un Plus in 2010, which was the first tech impact early stage VC fund in France. But this team is supported with 4 operating partners, which are dedicated to help companies grow on sales and marketing, on impact, on HR, and in the United States. Okay, we are not sector-driven, we invest in entrepreneurs whose tech and innovation tackle the world urgent and real challenge. Today, the sector in where we see the most opportunities are energy transition, circular economy, education, health, and employment. We invest in some companies each one is a platform, a company training, recruiting refugees for large corporates, or more recently in Castali, which are fighting against plastic bottles, or Ava in the US, an intelligent artificial company helping dumb people to follow conversation with 17%. Okay, since 2008, we've implemented this strategy through 3 vehicles, 1 philanthropic foundation vehicle, 1 early stage venture capital fund dedicated to impact Series A impact company, which is a 50 million fund, and 1 growth tech fund, Ring Altitude, of 165 million euros. Ring Altitude transitioned in 2020 from a sustainable investor to a full impact investor, and now we are, which have proven that both growth tech companies could be very impactful and performing well. Ring Altitude 2 is a successor to Ring Altitude 1, and will invest in growing tech companies reaching above 10 million euro revenues, profitable, and whose key business is to address social and environmental challenge. Thank you very much, and see you soon.
Thank you. Great. Super sharp 4 minutes also. Any questions?
Hi, thank you for this. Just asking for you, you see a lot of P guys going where you are right now, very generalist funds. You see that as an advantage or a risk for you? How do you perceive that as being pioneer in there?
It's a risk, it's competition, but at least it forces us to be more focused. P guys, here we see them. When we are competing with P guys, as you said, we have data scientists, we have a guy who was one of the head of R&D at Criteo. We are really techies, tech guys. So entrepreneurs, they like to see a kind of variety of expertise within the investor. We have Marie Capucine, who was the VP Marketing Europe of Saxo Bank, very knowledgeable about digital marketing and fintech. So this is an asset. And second, the same thing is true for impact. When entrepreneurs raise money, many of them like to paint some green color or social color. Yeah, we need money. By the way, you're an impact fund, we are an impact VC fund. We are pretty tough on the impact standard, on putting the mission in the bylaws, in KPIs reporting, in asking people to incentive all their employees with stock options that are dedicated to KPIs. So the real mission-driven entrepreneur is say, yeah, these guys are going to make us different, help us grow and be more impactful and therefore stronger. Those who are not that serious about that, with we are impact, but we don't want to do that much. Sharing the capital with all employees is not necessarily very useful, and we don't want to be bothered with legal and mission and so on. So it helps us make the being more attractive to real mission-driven entrepreneur, and to have the other less interested in what we offer. Thank you.
Thank you. Great question too. Okay, next up we have a Nordic team with an amazing track record in building and scaling tech companies and now building a European impact investment platform. Welcome, Norslab. Thank you.
Hello, everyone. Bonjour. I'm super excited to be here today. I actually lived here 14 years, and I moved back to Norway 4 years ago, back home, you could probably say, to join Norselab, and this is the first time I'm back. So I'm hoping that I can convey some of the excitement that I have when I present Norselab here at the world's largest event for the planet. We're all gathered here because we know that we need to change the course of our future. We need bold ambitions, we need serious commitments, and Norselab is here to be part of the change. We are a Nordic impact investment platform based out of Oslo, Norway, and we invest in our planet. We have one big ambition, and that is to prove that impact is the future across all asset classes. What we do is that we back meaningful companies to spark radical change in resource-intensive global industries. And to do so, we have created our very own impact philosophy. We call it meaningfulness, and let me explain what that is. It's built on 3 core pillars. So this approach consists, first, of considering impact through a company's products and services. Of course, for bigger companies, operations can be important. We believe that when we want to support the companies of tomorrow, we need to focus on their products. How do they make money, basically, and is that good for people and the planet? The second thing that we care very much about is what we call net impact. And that is about accounting both for the negative and the positive that companies have to bring. And we quantify this and we produce a net impact score for all of our investments. And of course, we can only invest if companies are solidly on the positive side. And the third pillar of our approach is that we want to invest where it's most urgent. And it's from here that our industry focus comes. We know that in large global industries such as agriculture, energy, real estate, you name them, there are huge challenges. And this is where we can drive massive positive impact. So our watchword in our approach is integrity. And that is why we apply multiple lenses when we assess a company, and we apply multiple data layers. And no investment can happen at Norselab unless my team and I have approved it. So before even getting in front of the IC, we will have to check it off as yes, this is a meaningful company, you're good to go, you can invest if you believe that from the commercial side, it's all good. So I'm going to take a minute to talk about our latest Fund for Change, Meaningful Equity 2. This is an invitation to join the Nordic Impact Revolution. Here we will invest in net positive companies with potent growth potential. We will invest in late seed to Series A, and with a clear ambition to take the company to a larger international round within 12 to 18 months. We invest primarily in powerful impact themes such as energy transition and efficiency, circularity, and sustainable food systems, which is, of course, everything from the sea, the land, and all the way to the consumer's plate. And yes, I see you. So with that, let me say thank you. We're looking for investors now for Meaningful Equity 2, those that want to help us create a meaningful future for all. So join the Nordic Impact Wave and let's change now.
Thank you very much. Love the call to action. Join the Nordic Revolution. One question.
There are fantastic frameworks such as the IMP framework to measure your positive or negative impact on society. What type of framework did you use to come up with your net impact?
Yeah, so we use several frameworks. As I said, we really care about having integrity in our approach. So for us, the only way to get integrity is to really look at multiple lenses, multiple layers of data. So of course, our approach based on frameworks such as the Impact Management Project, we of course use the SDGs, we of course look to the EU regulations, and we also work with a Finnish data provider called the Upright Project that you might know, that help us with the quantification of net impact.
Okay, awesome. Thank you so much.
Thank you so much.
Thank you. So we have 3 more funds in this final stretch. Next one, newly launched fund that has the ambition to drastically redesign how we use goods and materials. This is Circular Innovation Fund. Welcome.
Thank you very much. Hi everyone, I'm really happy to be here today to have the opportunity to present Circular Innovation Fund. So let me start with a very common statement. We have one planet only, and it's limited. And so I'm a dad of 2, and I don't want to tell them to stop the growth. I don't want to tell them to go to Mars. I think there are other options, like building a resource efficiency future. So that's the ground of the Circular Innovation Fund initiatives. So it is obviously an impact fund. So we are SFDR 9, and our investment thesis focus on coping with natural resources scarcity and the issues related to waste pollution. So we are a global fund. This is, I believe, the first global initiative on the circular economy. We will invest in North America and in Europe and in Asia. And to do so, we are partnering between, this is a joint initiative supported by 2 pioneers in the clean tech VC scene, Demeter Partner based in Europe and Cycle Capital based in North America. So I'm the partner in Europe. There is another partner in North America, and we are currently hiring a third partner to go to Asia. We believe that this global footprint is key for this initiative. In frontier markets, resource management is not nice to have, is really key to fuel the growth of these highly demanding areas. This is a fund that is supported by strong industrials with a great diversity. So we have L'Oreal as an anchor investor. So they are here today, and really thank them because they have been here and co-designing, thank you Rachel, co-designing this Circular Innovation Fund with us. This is a great support. We appreciate their valuable input in assessing the opportunities. We also have investors from other areas like Axens, which is one of the leader in the plastic recycling, and many other support. Last key point I would like to underline is the gender diversity. So this is really something that is central to our investment thesis, and our carried interest is related to this performance. Regarding portfolio construction, so we just started. We made our first closing a few months ago. We had 2 investments done already, and we are focusing on growth stages startups on 7 sectors. I will be happy to give you more details on this investment strategy. We are focusing on companies that are generating revenues or that have strong interests from clients. We are not excluding capital-intensive companies because we believe that seed funds have made an amazing job in the last 10 years, and that we have the opportunity to pick up the best ones going on the industrial scale. Time is running out, so we have a comprehensive ESG platform throughout the whole investment and divestment process. We have this joint structure with Cycle Capital and Demeter. We have industrial LPs helping us doing the best investment possible. And that's where we are. We made the first closing at 80 million. We are currently rolling closing. We are about 100 million and targeting by the end of the year, with your support, hopefully, 150 million.
Great. Thank you so much. Question, I think.
Hi, so I'm just wondering, are you seeking the same type of impact in North America, Europe, and Asia? Or are the difference you see in those markets?
There are obviously differences. I think Europe is more mature market in that capacity. But we do see very interesting, I mean, it's a huge market, so we do see opportunities that are really attractive for us. I can give you plenty of examples, but I mean, the entrepreneurs are not as trained to discuss with impact funds, but they are definitely entrepreneurs with strong beliefs, and those are the ones we want to support. So although it is maybe not such a mature market, we do find opportunities and great entrepreneurs. And so, yeah, there are differences. But we can elaborate on that, but there are definitely opportunities, and that's why we want to have this global footprint.
Okay, brilliant. Thank you so much, Circular Innovation Fund. So we have 2 more funds left. Next one, an early stage investor in the infrastructure that supports all women and working families to close the gender gap. This is Springbank Collective. Welcome.
Hello. Oh, yes. Good afternoon. You stole my thunder. I'm Jen Koss. I'm the founding partner of Springbank Collective. And as mentioned, we're an early stage investor in the infrastructure that supports all women and working families to close the gender gap. I think you guys know the stats. There's a lot of them. They're very dire. Women are really out of the workforce. And unfortunately, I mean, I think the stat that's really shocking is even in the US, as of January, they were at an all-time 33-year low. And why? Because of so much unmet demand, antiquated norms, and truly sort of crystallized biases. And private capital has dramatically underinvested and underestimated, to be honest, the infrastructure that serves all women and working families. And we think of this as a $1 trillion opportunity hidden in plain sight. To be honest, I think post-COVID, we have all seen the invisible become visible, so maybe it's not so hidden any longer. And that's why we started Springbank Collective, because we wanted to invest in this infrastructure that will improve the lived experience of women. The infrastructure is made up of 3 key categories, and this is how we look at it thematically. It's care, career, and consumer. Care, so connected, better solutions for children, the aging, and even more specifically, women's health. So an example would be our company called Wealthy, which is a care concierge service providing admin and logistics for those taking care of loved ones that are aging or sick. Career, reforming and reimagining work as flexible and fair. An example of that would be Chief. It's a members network for networking and support for executive women. And as of last month, it became a unicorn in our portfolio. And consumer, so building healthier, sustainable families and household. As a mother of 4, this one means very much to me. An example of that, by the way, is includes financial sort of caregiving or financial health. So Copper is a teen banking app that provides financial literacy first in schools, and 52% of those users actually are girls. We are a unique team. It's 3 GPs. It's myself and 2 others who are based in New York. Awkwardly, we have 6 Harvard degrees between us, but we have other wider networks that bring in from corporate finance, private equity, fund investing, angel investing, policy, strategic consulting, operating being an entrepreneur, this is our edge. This is how we win deals. This is how we source them, diligence them, and invest and provide a lot of value for our founders. We also have an amazing group of advisors who invest in and around our thesis, also operate in our thesis or invest in our sub-theses. And they have been critical for us as well in terms of sourcing and diligencing and providing value for our founders. And then we have great partners such as Pivotal, which is Melinda Gates's arm, her venture arm. And she supports all of our ecosystem building work in what we call FamTech. So how do we get here? We started 3 years ago, formally investing together. We started writing angel checks, and then we handpicked a network of over 100 individuals and investors to help deploy capital with us deal by deal. Then we realized we're onto something, so let's raise a fund. Our pre-fund, which is the investments that we made prior to raising this fund, has a gross TVPI of 1.9 times. We have 12 markups. We have 1 exit. We have 1 unicorn. So we seem to have a pretty good track record so far. And our current fund includes 7 investments alongside some stellar co-investors who we call friends and great partners with all genuine respect. Finally, I'm getting there. Just quickly, this is how we win. It's 3 things. It's our mission. We win deals and get on cap tables because founders like us and they like our mission and they want to be mission aligned. Our network, because we are highly connected and also have, as I mentioned, the collective, our advisors, people who support us and who help us source and diligence and provide value. And then the last is that we have real world experience. I think this is something that is sometimes underlooked and maybe even underestimated, but the fact that we come from typically non-venture background is important. Finally, oh, sorry, no?
Yeah, sorry.
Yeah,
sorry.
okay.
That was awesome. Okay, thank you so much. Beautiful, clear presentation. Jen, any questions for Jen?
Yes.
How do you engage with your investees from an impact perspective?
Our investors. So impact for us is really, I like to say like we're impact without actually saying impact. That's one. But second is, it's sort of first screen, last check. So that's kind of how we look at it. And we really drive it sort of company by company and within each of the companies and founders. A lot of these are very early stage companies. So we basically, for example, Wealthy is a good one. What do they track? An important metric for them is what percentage of caregivers who use their service do not fall out of caregiving or their jobs. That's one example. We have a pelvic floor therapy, omni-channel sort of retailer. What do they measure? They measure sort of postpartum health improvement, self-reported. So we kind of look at each of the companies and work with them to come up with their metrics. Yes.
Awesome. Thank you
very
so much. Thank you. Okay, so we are now coming to a close. And as with the first round, I want you to give the same energy and enthusiasm to the last fund that you gave to the first. So in a minute, let's welcome on stage dedicated to climate tech, Planet A Ventures. Welcome.
Thanks a lot. Yeah, I think the name is pretty implying, and I'm super happy to be here today and talk to you about us as Planet A and why we think that capital has a huge responsibility and why today's investment decisions are going to shape tomorrow's economy. Quick heads up, we as Planet A, we are currently raising our first fund. We've hit our target fund size, are now filling up to the hard cap, which is fantastic. I have had 2 first closings and 8 investments that I'm also going to mention quickly, but what I really want to get at today is our thesis on impact. So basically, we looked at what we know from science, and we found that the planetary boundaries, a model developed by the Swedish scientist Rockström, are extremely important because we have to understand that our planet is interconnected, the biosphere is interconnected, and by singling out one single dimension, we might run into the next existential crisis with a foreseeing eye. And therefore, we've clustered 4 impact categories, which are, of course, greenhouse gas mitigation, but also waste reduction, resource savings, and biodiversity protection. And the beauty about all of these 4 categories is that you can put units to that. You can measure that in kilograms, in tons, in liters, in square miles, and so on. And in the end, it comes down to us, to that simple formula, which is impact is the product of two variables, the business side multiplied with the impact side. So the question stands, how do you measure impact? And we've been touching on the topic quite a bit. And in the end, we decided to make that a core of what we do at Planet A. And basically, we fall back to one of the gold standards when it comes to impact measurement. We're using life cycle assessments. A life cycle assessment, in a nutshell, is a holistic overview of all materialistic and energetic inputs which are needed to create a certain product. So from sourcing the raw material to transporting it, to producing the product, to the use phase itself, so does it give away microplastics, for example, while being used, and to the end of life, so how can it be recycled in the dedicated region. And in the end, this is a big tree with all of these little data points which sum up to a holistic picture. We're able to make a very precise, not only qualitative, but quantitative statement about how much better a certain product is compared to the status quo. And we decided that this is so essential, and this is also helping us in our investment process, that this is something we do in-house. So we have a team of scientists which conduct these life cycle assessments. It's a lengthy process, don't get me wrong, so we only do it once we enter DD, but based on the thesis that in tomorrow's economy, the companies which are creating the biggest positive impact will also be the biggest winners in a traditional sense, meaning commercially. And maybe to put some lab-grown meat to the bone here, how that looks like, this is the spectrum of companies that we invest into. So from software to dedicated hardware plays. And maybe to single out two of them, one company I want to talk about is MakerSite. MakerSite is basically a SaaS tool which allows users, so this can be designers, purchasers, product owners, and so on, to in real time understand the Scope 3 emissions of their products. So they've really cracked that nut throughout the entire supply chain. So they know basically only based on your bill of material and where you produce the entire emission, cost, and compliance footprint of your product, which is absolutely insane. And they are also allowing users to simulate how would that change if you exchange the casing from titanium to aluminum, for example. And the other side of the spectrum, the hardware case, a company that I want to single out is Ineratech. Ineratech is basically the e-kerosene, the world leader for the production of e-kerosene. So a way to tackle how can we fly long distance, and I'm sure a couple of you came here today by plane, how can we tackle that and make it and produce it in a sustainable manner. So I talked about Planet A in a nutshell. We invest between 1 to 2 million initially in seed to Series A tickets. And one thing I think I forgot to mention is that we, based on our knowledge, we were one of the first, maybe the first SFDR Article 9 classified fund in Germany. Don't want to take more away of your lunch break, so over to you.
Thank you so much, Nick. Wonderful. Okay, so last question you have the privilege of asking.
Thanks a lot. Very interesting, and I really appreciated the detail on your methodological approach for measuring impact. So in that sense, I'm curious to know if you actually try to measure separately the impact that your investments have versus your impact as an investor. That's one question. And second, since you do like such a complex process of measuring impact through the LCA and all of those details, do you make a case of doing an exit strategy that also considers this to have a continuity on the impact that you're having or that the company is having?
Two very good questions. I would say that the impact that we as a company have is rather easy to calculate. It's basically only travel and not too much. We are a remote-only team, so no office, no nothing. So that's easily distinguished, and we of course track that. And then on the life cycle assessments themselves, yes, you must do it dynamically because sourcing changes for the products. They of course grow, and also you put it into a reference system, right? You have a company that you compare with something. This is how you end up with a delta, and the delta changes, but also the object of desire. So the company that we invested in changes over time. So we do yearly snapshots on the LCA and adapt it to whatever we find. Yeah.
Okay, thank you, Nick. Sorry to keep cutting you there. So that brings us to a close of all the funds that have pitched. Let's have a show of hands. Who saw someone on stage that you maybe want to deepen connections with? Grab again after. Okay, that's, I would say, a good 80-90% of the room. Let's have a show of hands who's hungry or thirsty. That's, I think, 100% of the room. So good news for you. If you registered for this session and have a purple wristband, there's a special lunch and cocktail in the meeting Eiffel, which is just around the corner in the middle by the bubble, and volunteers will help you find it. Thank you, everyone, for being a super focused and energetic audience. Thanks to all the pictures, and thanks to the LPs. That was great. Wonderful. Thank you.